Yeah. Welcome back to yet another episode of Crypto and the Caribbean, the show where we cover all things crypto and Caribbean related. I'm your host, L, and today we got some big news for you coming out of the Bahamas. Earlier this week on Wednesday, the Bahamas released its official policy white paper for digital assets. That's right, people. On 4/20, the Bahamas dropped its first mixtape in years. This 9-page document basically covers how the Bahamas plans on approaching the digital assets industry and what kind of rules, regulations, and policies we could expect going forward, seeing as it's already started. If you were interested in what the Bahamas plans on doing with digital assets in the future, but like most people, you don't feel like reading them 9 pages, you are in luck. We're about to dive into that today, so stay tuned. Mentioned earlier, this 9-page document dropped on Wednesday earlier this week, April 20th, 4/20. I've read it top to bottom twice so far, but I wanted to go through it some more. So what I've done is I've highlighted some of the most important parts. Certain themes I noticed kept popping up throughout the entire white paper. Those themes being, and when I say openness, I don't mean transparency, to be clear. I mean openness in terms of an openness to foreign insight, foreign investment, and foreign development, that kind of openness. Speed, it's an emphasis not just on how fast the field itself moves and evolves, but how fast regulators and government officials need to be able to move in response to the industry. Adaptability, going off of the speed theme earlier, along with the speed, you also have to be adaptable because moving fast itself isn't enough. You have to be able to adapt and adjust on the fly to maintain a certain standard, which I mean is important in any kind of planning, especially when diving into a new industry. There's an emphasis on looking ahead, not just using the current examples that exist, but trying to anticipate what's coming next. Preparations can be made. Reputation, as in the Bahamas' reputation, take that however you may want to take it, but the Bahamas' reputation is of utmost importance, and you'll see what I mean as we dig into the white paper a bit more. And Bahamian accessibility, be it easier on-ramps for Bahamians using the local currency, which is Bahamian dollars, as well as the accessibility to resources and training to actually develop businesses and careers in this new field. So it's more than just being able to buy Bitcoin and being able to trade cryptocurrencies. It's actually diving into the building blocks and the foundation of the technology itself, the blockchains, the distributed ledger technologies, the back-end development, management, all of these things, making sure that they're all accessible to the Bahamian people. These things are prominent throughout this policy, and there I feel the most important parts of the white paper. Yeah, let's just dive straight into it and we'll go through it. I'm not gonna just read every section piece by piece, because no, but I will just summarize some of the highlighted points that I had to emphasize the most important parts of each section. Right, so let's just jump straight in. Here, introduction. The Future of Digital Assets in the Bahamas. Policy White Paper, 20th of April, 2022. The contents, the introduction, policy objectives, promoting economic growth, maintaining the Bahamas reputation, remember that reputation, and good standing, keeping relevant, skills and education, Bahamians access to digital assets, sustainability, capacity building, funding, proportionate and balanced approach, and the conclusion. Now I just have it side by side like this so you could see the front page and the table of contents. I'm going to actually increase this so that it's not, you don't have to strain to see some of the stuff. I don't expect you to actually read this stuff. I will have the entire document linked below if you are one of the odd people like me who actually would sit down and read this entire thing. Because like I said, it's just 9 pages. 9 pages, a pretty decent sized font. I mean, in white paper terms, this is relatively small. I'll show you an example of a long white paper. This is small, trust me. The Bitcoin white paper was 9 pages. This is relatively small. But let me increase this so it's a bit easier for you all to read. So part 1 here, we're just going to jump around. I'm just going to jump to exclusively the highlighted areas. So if you're following through, it's just the highlighted areas. If you just have this playing in the background, that's even better. You'll be less confused. So it reads, it is a complete policy update and its actions have been informed by the Bahamas' initial success in attracting significant digital asset businesses to set up in the country. So here they're referencing FTX. FTX being the premier or the first digital assets company to be established in the Bahamas after the DARE Act, the Digital Assets Regulation, blah, blah, blah Act. The success of FTX being set up in the Bahamas, it's attracting other digital asset businesses to come in as well. By our vision to transform the Bahamas into the leading digital asset hub in the Caribbean and a global leader in the progressive regulation of businesses in this profoundly innovative space. And they have underneath that, they plan to substantially grow the sector by 2025. So realistically, we're looking at a very aggressive approach, possibly like 3 to 4 years going forward, where they want to establish the country as not just a regional leader, so it's bigger than just the Caribbean. We don't want to just be the leader in that area in terms of digital assets, but what they're saying here is they want to establish almost a regulatory blueprint. They want to establish a guideline that other countries would be able to then basically just copy. So we want to create the ultimate playbook, so that others could come to us for reference on how to create their own playbooks. Going on, it says to maintain high standards and sustain the good reputation of the Bahamas. Now, remember that recurring theme, that reputation. So high standards and good reputation for the Bahamas is of utmost importance. It's literally in the first paragraph that they put. I can't emphasize this. It's in the first paragraph that they put. Reputation is of the highest importance among all of the other things that we're going to be discussing here. So moving on, 1.2. So they talk about here, it reads, by November 2021, the total market value of all crypto assets exceeded $3 trillion USD. Basically just highlighting that in little over 10 years, a multi-trillion-dollar industry was created from absolutely nothing. Bitcoin started at zero, and Bitcoin being the grandfather of everything else that we're seeing right now, going from zero total market to 3 trillion in a little over 10 years, absolutely insane. Central banks such as the European Central Bank, the Federal Reserve, the Bank of England, and the Central Bank of China are at various stages of exploring, developing, launching, and trialing CBDCs, or central bank digital currencies, just like the Bahamian sand dollar, which is our central bank digital currency. I mentioned here on March 9th, President Biden issued the executive order, which was basically designed to start pursuing some appropriate regulation for this digital assets industry and cryptocurrencies and things of the like, because there's no actual uniform oversight in the space. So you have different agencies that have different definitions and different guidelines for how to deal with crypto, how to deal with NFTs, how to deal with digital asset businesses, how to deal with individuals, how to deal with corporations. Everyone has different rules. So this executive order from President Byron essentially emphasized the need for a unified front for them to come together and come up with one legitimate set of rules for crypto. And here at the very end of it, it says this directive clearly indicates the United States' intention to explore options for developing its own CBDC and acknowledge that crypto is here to stay. I think that's clear enough. The whole point of the executive order was Byron saying, look, this crypto stuff is here to stay. We need to figure out how to deal with it. To the next point, Section 3. Volatility in the value of crypto assets remains high and therefore they are not suitable for all investors. We've heard this argument anytime cryptocurrency comes up. Volatility, volatility, volatility. So it goes without saying they have to address it. They're obligated to address it. These risks and the risks associated with financial crimes such as fraud, money laundering, and illicit financing necessitate proportionate and relevant policy responses. Okay. It talks here about striking a balance between two very important parts of regulation and mitigating risks. It says, on the one hand, effective risk-adjusted regulation appropriate to a novel and burgeoning industry. Basically saying, look, we need some rules, but you don't want too much rules to stifle the innovation and stop people from being creative. And on the other hand, supporting the growth and economic potential that innovative financial technology can bring. The other side of the coin, where they emphasize the support and the encouragement of people to use this technology in new, innovative ways to actually bring in revenue for the country. It ends here. This policy will provide sustainable growth for the Bahamas economy and increase the prosperity of its citizens. So that part's pretty straightforward. The whole point of this policy is to figure out how to get this to make money for the Bahamas. Moving on to point 4. So here it's talking about the government's approach to digital assets. So it says here that it builds on examples of successes in other countries like Gibraltar, Switzerland, Liechtenstein, and France, also considering current and proposed regimes in places like the US, the UK, UE, Dubai, Singapore, Japan, and Australia. And I mean, funny enough, none of these countries genuinely know what they're doing. Everyone is just guessing. Let's be upfront and honest right now. Every single one of these countries listed is completely guessing in terms of their policies. Mind you, they have some general ideas of how they want it to work, what they want to do. Realistically, they just want to figure out how to regulate it and how to make money from it. That's the two main things. But none of them really know what they're doing. Shots in the dark. It's a completely dark room and they just throwing stuff at the wall and seeing what sticks. What I mean. We have an article, Cryptocurrency Regulations Around the World, updated February 2022, so just 2 months ago. So now here we have the information from the US. Now I think this was prior to Byron's executive order, but nonetheless, confusion. Canada, confusion. The UK, different confusion. Japan, different confusion. Australia, different confusion. Singapore, confusion. South Korea, confusion. China, confusion. India, confusion. EU, confusion. And when I say confusion, I don't mean that they're just going in blind, but everyone is just guessing and feeling their way around the dark, trying to figure out what works, what doesn't. You can dig into them and see exactly what differences they have in their policies. I'm not going to do it here because these are hella long, but they're in-depth. globallegalinsights.com is the website for it. You can look into it. This one here for Gibraltar. We got one for Switzerland. We have more information for Liechtenstein if you're interested in that. France, the UK, information on Dubai, the UAE, Singapore, Japan, Australia. So all of these people have different ideas of how to approach it, and none of them are completely right because it's their first time digging into this field. It's their first time exploring this new industry. So they're gonna get some stuff wrong. They're gonna mess some stuff up along the way. I say all that to say the Bahamas pulling our examples or pulling references from these other countries and other jurisdictions, I feel just a matter of cherry picking the unique things that work and the things that we can best take advantage of from these other countries and their policies so that we could have the ultimate, so it's the best of all the different worlds at one time. You get me? 1.5. Here it's talking about the framework and why it's been developed in the context of the significant growth and digital assets and international efforts to regulate the space. And it's talking about some of the regulators here and some of the international groups that now have a stake, that now have interest in regulating this space. You have the G20, the Bank for International Settlements, the Financial Action Task Force, the Organization for Economic Cooperation and Development, the International Organization of Securities Commission. So all of these international entities now have one shared interest, and that's finding a way to fully and properly regulate the digital assets industry. Here at the bottom, they talk about the DARE Act, the Digital Assets and Registered Exchanges Act, and the FCSP Act, which is the Financial and Corporate Service Providers Act. And it says that this framework will ensure that the Bahamas remains at the forefront of nations seeking to provide a well-regulated, safe space for digital asset businesses. Again, back to this notion of being at the forefront of other countries and a safe space for these digital asset businesses to set up. Keep that in mind. It keeps popping up. On to 1.6. The FATF clarified that virtual assets fall in scope of its global anti-money laundering standards. You know it wasn't going to be long before we had to talk about money laundering. It's just a must. It's a financial industry. It's a must. And it also highlights that they publish an interpretive note and guidance on a risk-based approach to virtual assets and virtual asset service providers. A lot of fancy words. All in all it's saying is that the FATF, the Financial Action Task Force, created a guideline for how to approach virtual assets in that kind of industry safely or in a safe way. And remember me mentioning earlier that 9 pages was really short for a white paper? Take a look at this. This here is the FATF's guidance for a risk-based approach for virtual assets and virtual asset service providers. And this, keep going. There's how many pages here? All of this. Come down to it. 109 pages. They released this 109-page document for governments to go through, for them to be able to safely create legislation and regulation around virtual assets. This is what they did. So now you kind of see why I say 9 pages ain't really nothing. Anyway, 1.7. The government is committed to the fight against money laundering as well as against illicit and threat financing. You gotta say it. You have to say it. Further down it says, as their primary regulator, the Securities Commission of the Bahamas, the SCB, ensures that the digital asset businesses understand their compliance obligation. So right here, it's highlighting that the SCB has the highest authority among regulators. So in terms of the digital asset industry, Securities Commission of the Bahamas is the top dog in the space. 8. Of the legal regime established by the DARE Act positions the Bahamas as an attractive destination for some of the world's largest digital asset exchanges. An attractive destination for some of the world's largest digital asset exchanges. So we already know we have FTX. This is basically saying that we're encouraging more of these companies, more of these digital asset exchanges to come and set up shop in the Bahamas. Right? Now the Bahamas is like Khalees back in 03, right?
My milkshake brings all the boys to the yard.
To the yard, they're bringing whales to the yard.
Damn right, it's better than yours. I can teach you, but I have to charge.
Currently processing several applications for registration under the DARE Act, with other interested companies either applying for registration or evaluating the Bahamas and its digital asset regime. So, I mean, basically they're saying that milkshake working. People come into the yard. They got companies, they got institutions showing interest in moving their digital asset businesses to the Bahamas and setting up shop in the Bahamas. 9. It says here, we will encourage banks licensed in the Bahamas to incorporate a calculated and robust risk-based approach to onboarding and monitoring digital asset businesses as an alternative to following a pro forma de-risking policy by avoiding entities operating in the digital asset space. So all of that to say, banks are going to be encouraged to onboard. They're going to be incentivized, basically, to onboard more of these digital asset businesses following the guidelines that have been set up, obviously, instead of the default which they had before, which was to simply refuse or deny these businesses. So prior to this infrastructure being set up, banks by default would just say no. If it was a digital asset business, if it was fundamentally based in digital assets, the default answer was no. They will have dialogue and an appropriate approach with international correspondent banking institutions. So they want to make sure that our banks can do business with the international banks. Going on to 1.10, last part of the first section. All of that is just the introduction, people. We can speed through the rest of this a bit faster, but I just wanted to lay that groundwork so you could understand what they're actually trying to do here. Ends by saying we will publish an annual update and undertake a comprehensive policy review by December 31st, 2023. So they're saying that not only are they fully engaged in this process now, this is already a go. This isn't something that's going to happen. This is already happening. As you're watching this right now, it's already being implemented. And they're saying that they're already, in a sense, in the fine tuning phase. So they've been planning this for a while now. They've been setting up, laying down the bricks, setting up the foundation. And now that it's already set up, they're in implementation mode. And then they're transferring over to the fine tuning phase where they're trying to tweak and make sure that all of the little details, all of the T's are crossed, the I's dotted, and to make sure that everything is exactly where it needs to be to fully benefit the Bahamas. On to the second section now, policy objectives. So I'm just gonna fly through these because a lot of them are pretty self-explanatory. So we have here, explore new opportunities, in decentralized finance, DeFi, non-fungible tokens, NFTs, stable coins, and asset reference tokens, which is kind of another way of saying stuff like stable coins. It's just a token referencing another asset in and of itself. Improve the attractiveness of the Bahamas, remember that reputation, to clarify and expand the scope of the current legislative framework, i.e. the DARE Act, so to expand, to broaden it, to fine-tune it, to tweak it however they see necessary. Encourage innovation and identify emerging technologies, so encourage ways to make more money. Explore linkages between the Bahamas' existing financial services toolkit, so figure out ways to cooperate or intermingle with this new digital asset industry and the existing finance industry's infrastructure. To fill jobs, you gotta make jobs. If you're introducing something and you want the people to be on your side, you gotta introduce some jobs. Work with the Central Bank of the Bahamas to enable Bahamians to access digital assets in Bahamian dollars. So they want to make sure that onboarding citizens with the local currency is at the top of their list. They want to make sure that's emphasized and it's an easy onboarding process. So my only question here though, a little aside from this, is in a sense via the sand dollar, because as it stands right now, the sand dollar is not really being used. It is being used in select situations by select vendors or institutions or whatever, but in terms of the general population, it's not being used. So will this be a way to kind of ease people into using the sand dollar and to getting comfortable with that CBDC? I don't know. We have to see. Going on about expanding and growing the SCB in their role as the preeminent digital asset regulator. Again, in the space for the Bahamas, the SCB is the top dog for digital assets and enable it to become a global center of excellence. Again, reputation. And lastly, to provide sustainable funding for policies, initiatives, and programs. Because I mean, the money got to come from somewhere, right? Like that all of this stuff doesn't just poof out of nowhere. Money has to be poured into this to build out the infrastructure and flesh out how this is going to work. So they got to find funding somehow. Going on to the third section, promoting economic growth. Until recently, much of the benefit of this new asset class and its related business sector has been concentrated in high-income economies. It's basically emphasizing that larger economies, larger countries, the US, China, Russia, the UK, a lot of these larger nations have been the main ones actually benefiting from the growth of the digital assets industry globally. You haven't really seen as much of an explosion in smaller countries, even though that is starting to change. And it highlights it a little bit under that more recently developing economies have been able to leverage this new technology. It says at the bottom here, digital assets have become a web-enabled digital economy capable of creating as well as facilitating new business and growth opportunities beyond Bahamian shores. So it's emphasizing now that these smaller nations like the Bahamas are able to leverage this new technology to create new ways to build businesses and grow the economy. On a 3.2, set up in the Bahamas. It's attracted leading global digital asset brands to set up operations in the Bahamas and seek registration under the DARE Act. Again, enticing foreign companies to come set up shop in the Bahamas. It says these businesses will provide much needed employment as well as investment in local infrastructure and social projects. So there's potential here. They're saying that these businesses with the revenue and the types of business that they bring to the Bahamas is going to provide employment and provide funding for local infrastructure, local projects, but I mean, it's still very vague how this is going to be set up, how this employment is going to be distributed, what kind of employment, what local infrastructure and social projects will be funded, where are these things going, what percentage of them. It's still pretty vague. So we need some more time to see what concrete ideas they come up with. 3, talking about the businesses in the Bahamas having a multiplier effect of attracting yet more firms to the Bahamas. Again, bringing more companies to the Bahamas. Virtuous cycle. Now, from my understanding, this is an economics term, a virtuous cycle versus a vicious cycle. So with a virtuous cycle, it's, from my understanding, a cycle of events with a net positive effect that stimulates economic growth, whereas a vicious cycle, net negative, and it shrinks the economy. And 3.4, our focus is on expanding the economic benefit. Explanatory. I want to make sure that it benefits the Bahamian economy. Section 4, maintaining the Bahamas' reputation and good standing. It's an entire section, people. There's a reason you keep, when things are repeated constantly in official documents, it's intentional. Remember that. 4.1 here. Skipping a bit ahead, the paragraph here talks about the different types of risks like technological, criminal, financial, consumer-focused, market-based, blah, blah, blah. And it's saying the purpose of optimal regulation is to mitigate against these risks. Now keep in mind, they're not saying eliminate the risk. There's no way to completely get rid of the risk and still have a thriving industry. It can't happen. But they want to mitigate, they want to minimize how much risk they actually face and how much risk they can tolerate as they flesh out the rest of the industry. 4.2. Risk will be assessed and appropriately mitigated alongside considering the impact on our overall policy objectives. So, what this tells me, some risk will be accepted, especially when the benefit of that risk or taking that risk greatly outweighs the possible downside. 4.3. Combination of a sound, forward-looking regulatory regime and an effective and capable regulator. Basically, it's saying that the Bahamas is going to have a combination of decent regulations with a flexible and adaptable regulator to tweak those regulations. 4.4. The SCB will take lead on all regulatory matters relating to the digital assets and digital asset businesses. Again, emphasizing that the SCB is going to be running point on all matters to do with digital assets. 4.5. And the Bahamas is committed to fiscal transparency and saying that we'll make sure to have proper disclosure of the identity of ultimate beneficial owners and relevant stakeholders. So this is the typical KYC, AML, CFT stuff. So in KYC, know your customer, where every digital asset business owner is going to be able to readily identify everyone that uses their services. AML, which is anti-money laundering, which is preventing money laundering, washing dirty money, mixing it in with new money or clean money, and then pulling out the clean money. And CFT, which is the combating of the financing of terrorism. It's terrorism, it's terrorism. Continues here though, it says they're going to ensure that these digital assets are not used for the evasion of taxes and sanctions. Not used for the evasion of taxes and sanctions. 4.6. Talking about protect and enforce the rights in trademarks, copyrights, patents, and all other forms of intellectual property. So they want people to be comfortable that when they come here, they set up business, they set up whatever their IP is. If they have any patents, copyrights, trademarks, that it's fully protected and that they have a right to legal action in the event that any of those copyrights, trademarks, or patents are broken or infringed upon. And 4.7. Dispute resolution mechanisms. Ways for people to resolve any sorts of legal issues or any kind of issues that they run into in terms of their business's growth or development in the Bahamas in this industry. Now, Section 5. We halfway there, people. We almost done. Trust me. Section 5. Keeping relevant. It starts by highlighting that this is a new and rapidly evolving sector. Going back to that speed, how fast everything moves. 5.2, about these emerging trends, the new things like DeFi, NFTs, and blah, 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 saying that these have unique features when compared to the digital assets established at the time the DARE Act came into force. So what they're kind of admitting here is that the space moves so fast that the DARE Act, which was just established 2 years ago in 2020, is already becoming not really irrelevant, but out of date. It needs to be updated already. That's how fast the space moves. There's so much new technology already. Legislation and rules in place already need to be updated. 5.3, talking about the promotion of digital assets now. They'll review whether there's a need for controls to be implemented on the marketing and promotion, and saying it's important to adhere to and adopt international standards for financial consumer and investor protection. So here they're just talking about different ideas, or the possibility of different ideas on how to control or manage the way people advertise and people market these businesses and their services to you, general populace. 5.4. They're talking about, there's a lot of acronyms here, and I don't know why they put it in this order, because they tell you what the acronyms are in the next section. But they're talking about establishing the DPC, which is the Digital Asset Policy Committee. I don't know why they call it DPC when there's a whole A there for asset, but whatever. The DPC is going to be chaired by the Prime Minister, and the members will include the Financial Secretary, the Executive Director of the SCB, the Governor of the Central Bank, and the Chair of the Digital Advisory Panel. Now here in 5.5, they talk a bit more about the DPC and the DAP. So the DAP actually, the Digital Advisory Panel, is going to have leading digital asset experts. It's going to be their panel of experts for all things digital assets. And they're saying here a key component of the DAP would be having a composition that can provide focus on regulatory standards from international bodies and have key engagement with regulatory stakeholders domestically and abroad. So they're saying here is they need people in this role who are not just knowledgeable, but also tapped in enough to keep tabs on everyone else to adapt our own policies quickly. So we need someone in that spot who not only knows the space, but knows enough about the other players in the space so that we can adapt our policies to fit in or align with some of these other players. So this combination of the DPC, the Digital Asset Policy Committee, the DAP, the Digital Advisory Panel, and all of these other officials coming together represent the gathering of all of the branches of government and all of the necessary legislative bodies so that they could have one unified group for decisions being made in this new space, in this new industry. So they want to make sure that any decisions that are being made are run by everyone who needs to be involved. Ensure that each step is carefully crafted and each step is precise and intentional. So let's go on to the next section. Section 6, skills in education. So they open up here. Point 1, we will expand the range of sector-specific academic, professional, and vocational education opportunities available to enable Bahamians to secure positions in the industry. So right here, they're promising a wide array of educational opportunities for Bahamians to enter this field. Not just for them to be able to buy Bitcoin, like I said earlier, or just buy crypto, but for them to actually get into the field and the industry itself, to build businesses and to establish careers. Point 2, that they're going to encourage and support collaboration between applicable regulators, including the SCB, and private sector with the University of the Bahamas to develop a series of crypto asset courses and certificate and degree offerings. So here they're talking about some pre-approved UB courses for a custom curriculum to actually have graduates who will have knowledge and understanding of how the space is set up in the Bahamas specifically. So they want to set up an educational infrastructure to kind of funnel Bahamians who may be interested in getting into the industry into these exact positions that are being laid out now as the industry is being built. So down here to 6.3. Here they're talking about some of the challenges that banks will face as they open their doors to this new industry. And here, the highlighted part, rightly or wrongly, Digital assets are perceived as being at a higher risk for money laundering than many traditional financial assets. Now, I'm closing up on me so you can really focus here. It's already been proven assets are significantly lower risk in terms of being used for money laundering or any other illicit uses of money because of the traceability that these things have. There have not just been studies on it, there have been official reports from government officials stating that the traceability of these cryptocurrencies and these other forms of digital assets makes their job even easier. But we're not talking about the reality here. We're talking about the perception. We're talking about the narrative behind digital assets in this space. And the narrative dictates that these things are used for illicit means, for money laundering, for illegal activities. And as long as that narrative continues, it's always going to be a challenge for legacy finance and the banks and the banking systems to embrace this technology. But they pushing forward anyway because they know the money's there. Section 7, Bahamians' access to digital assets. Now this part, they only got one part. It's 7.1 and that's it. They short, sweet, and to the point. So they're saying here, working with the SCB and the central bank and private sector to enable Bahamians to access digital assets with Bahamian dollars and for Bahamians to pay taxes using sand dollar. So the first thing for me with this, what taxes? Like for real though, what taxes? I know VAT, I know property, I know stamp, import duties, and I guess licensing. But other than that, what taxes are we paying? We don't have income tax. VAT, value added taxes done at point of sale. So what taxes? So for me, the first thing I think of here is potential for possibly the introduction of new tax structures. So are we going to see potentially something like a new set of legislation for capital gains? Is it going to be exclusive to digital assets? Is it going to backtrack and include legacy finance as well? Are we even going to see it? I'm just guessing. Like none of this is set in stone, but these are some of the things I thought about as I read this. We could see some new taxes coming to the Bahamas. It's a possibility. Is it likely? It's a toss-up. I can't say because I'm not an economics expert and I'm not well versed in Bahamian legislation, so I can't say. Last part here, we'll also seek to promote wider use of sand dollars in commerce on the island. Again, coming back to using the sand dollars. So it sounds like there's going to be an initiative to push the sand dollar use nationwide. Now, is it going to be an initiative similar to like what we saw in Jamaica with the issuing of the jam decks where they offered basically free money? They offered you about $16. It's free money. $16 ain't a lot, but it's free money. Are we going to see an initiative like that undertaken in the Bahamas? Are we going to see some sort of other incentivized initiative to get people more actively using the sand dollar? Because as it stands right now, the sand dollar is, I can't call it dead because it's still actively used, but on a day-to-day basis for the average Bahamian citizen, the sand dollar is a dud. That's just not, it's not on anyone's radar. So I'm interested to see what kind of initiative they have to actually push and promote the use of the sand dollar. Moving on, section 8, sustainability, 8.1. Right to the end, folks, right to the end. We almost there. Here about introducing incentives for digital asset businesses that prioritize more energy efficient digital assets, such as those using proof of stake mechanisms, over those that are less energy efficient, such as those using proof of work. So this proof of work versus proof of stake argument, and I am honestly, I can't even call it an argument. I'm just tired of this conversation at this point. It's ridiculously one-sided. Yes, proof of work consumes more energy than proof of stake does. Renewable energy is slowly becoming the majority of people who support the proof of work consensus mechanism. Fundamentally looking at it, proof of work is still more fair in a distributed or decentralized sense than proof of stake. What are we even arguing about here? Like, what are we arguing about? Nonetheless, as the narrative goes, or the global narrative at this point I should say, proof of stake is more energy efficient, more environmentally friendly, So many governments are opting to go with those chains who they've already partnered with and establish legislation or incentives to encourage more people towards proof of stake than proof of work. So the Bahamian government obviously has to side with the majority, and the majority right now is saying proof of stake. So it is what it is. Establishing a system of carbon credits and a Caribbean carbon market using DLT, or distributed ledger technology, basically blockchain or some variation of blockchain. Basically here they're saying they want to establish a blockchain or a DLT based reward system almost for what's deemed as good behavior for the environment. So 1 and 2 almost go hand in hand. So they want to incentivize people to use the proof of stake mechanisms over the proof of work, and they're saying that they want to establish a credit or a reward system and a Caribbean market for these rewards, to encourage and incentivize people to use these environmentally friendly mechanisms. And I am being cynical, obviously. It's good that they are incentivizing and encouraging something that can benefit the environment, especially the delicate ecosystems that we have in the Caribbean. So it's always a plus. It just gets a little gray when you cross into the proof of work versus proof of stake debate and into the underlying purpose behind these systems that were initially set up. Moving on. Section 9, capacity building. Talking about the SCB, how they were established as a regulator, and stating that where necessary, the SCB has sought specialist resources from leading global digital asset experts. So basically saying here that when they couldn't come up with something that worked for themselves, or when they weren't sure about something, they looked to outside regulators and foreign officials to emulate or copy their systems or see how they approached a problem or how they approached an issue, and then tailor our response or our approach based on what they did. 9.2. Keeping abreast of developments in the continuously evolving field is both necessary and resource intensive. Basically what they're saying here is this means two things. It's going to require, 1, a decent amount of time for everything to be fully fleshed out, and 2, a steady and sizable income source. So it's going to cost money to really build this out and flesh it out to be the end product that they have in mind, that they envision with this policy and with this white paper. 10, funding. Only one section here. So it's saying that they'll consider introducing a development and training levy of the largest digital asset businesses to provide a sustainable source of funding. So, I mean, what I'm getting from this is that they could potentially be taxing the big boys to help upkeep this new industry. So they're inviting a lot of people in, yes. They're inviting a lot of foreigners to come and do business here. But the feeling I get from this is that they're going to be fleecing some of the larger players, almost a pay to play in a sense. So yeah, the levy, the fee, they're going to tax them a little bit. And it's going to be minuscule compared to the money that they're going to be making from these businesses. But nonetheless, money is money, and it's good that they're considering taxing some of these larger players as they come in, some of the larger whales as they come to splash. Proportionate and balanced approach. So, point 1, a careful balancing of regulation and policy is required to ensure that the objective of job creation and economic advancement are made in a sound environment. So they're basically saying that they want to be careful to make sure that job creation and improving the economy doesn't come at a significant cost. They want to make sure that the benefits greatly enough outweigh the costs of these kind of ventures. Jumping down to 11.3, ensure that all branches of government, its agencies, and the wider public sector are engaged and aligned behind this policy framework. So they're saying that they want to make sure that all parties involved, everyone that this policy being enacted would affect, everyone that would be affected by it, and these digital asset businesses and everything that happens going forward, they want to ensure that everyone is adequately involved and on the same page regarding the framework of the policy. One thing with this, though, for me personally, the only thing that I felt was made clear in the white paper were the first two. They said all branches of government, its agencies, and the wider public sector. So they talked about the branches of government for sure. They talked about the agencies already. We already had a bunch of acronyms throughout this entire thing. But I haven't seen much about how the wider public sector is supposed to be engaged. So, first of all, who even is the wider public sector? Are they talking about just businesses? Are they talking about the citizens in general? And how is this wider public sector going to be included in the decision-making process? Is the wider public sector going to be in choices to make? Is it going to be an open discussion? Is it going to be decided ahead of time and you just present the options to the people? What is that going to look like for the wider public sector? And finally, we're wrapping it up now, the conclusion, part 12. So the first part here, during 2022, this is where they're going to sum up the entire white paper. During 2022, we will set up the DPC and the DAP, build capacity and expand the resources of the SCB, expand digital asset skills and education opportunities, update the DARE Act, start enabling Bahamians access to digital assets using Bahamian dollars, and enable payment of taxes using digital assets. It's still really weird to me seeing them talk so much about taxes when we really don't deal with taxes like that. I mean, when you think about taxes, you think about the Bahamas? Like taxes in the Bahamas? We know the Bahamas' history in terms of taxes and international entities, right? So like, I don't know. It ends here, 12.2. This policy framework will enable the Bahamas to create a vital opportunity to tackle some of our economic challenges and provide jobs and prosperity for Bahamians. So, all in all, from top to bottom, that was the Bahamas official white paper in terms of how they're going to be moving forward with the legislation and policies in place for the digital assets industry in the country. And remember those themes I mentioned earlier. You notice those themes were prevalent from top to bottom throughout this entire white paper. We had the talk of openness to foreign entities, be it advice, guidance, investment, development, whatever have you, that openness for the world's input in how we frame this. We had the speed of the industry and the speed with which we need to move to adapt to the industry and adopt some of these newer policies. We had adaptability, so we need to be able to adjust, to shift, to change. As they stated, the DARE Act was established in 2020. Right now it's 2022, and the market, the industry itself has already evolved past what they had established with the DARE Act just 2 years ago. So we need to be able to grow and adapt quickly. The forethought, which is them looking to outside examples to see the potential of what could happen and making sure that we have a decent framework and infrastructure set up to anticipate some of those things. The Bahamas' reputation, which, I mean, you saw it for yourself. Our reputation is very important, and they made that quite clear with this white paper. Our reputation as the regional leader in this space and the global standard for legislation and regulation for the digital assets industry. That reputation is going to be very important, and it looks like they're going to be very careful and very deliberate with how they move with that reputation. And finally, Bahamian accessibility. So Bahamians not just having access to the assets themselves, but having access to the resources, the education, and the training for them to be able to develop and innovate and grow in this space, to find jobs, to build careers, to build professions in this new industry. So all in all, the white paper is a decent read. It's very short, it's petite, little 4.8, 4.10, but it's chunky. So it's like about 150, it's thick.
Girl, you're thicker than a bowl of oatmeal.
That being said, I'm very excited that this white paper was dropped. I didn't expect it at all. We know coming up in the very next week, we have the Crypto Bahamas event with FTX, SALT, government officials from not just the Bahamas, but other countries as well are going to be coming down. They have celebrities coming down. They have speakers coming from all parts of the world. It's going to be a major event. And this white paper dropping 1 week before that event tells me that they have some huge things planned. They have some big plans in store. Big plans in store. And I can't wait to see how this fleshes out. I can't wait to see how this plays out. I'm going to keep a close eye on it. I'll keep coming with some updates to keep you all abreast in what's going on, what the situation is. Though you already know what time it is. If you haven't already, like the video and subscribe to the Gentleman in Crypto channel. Hit that bell too so you get notifications so you don't miss when we get these updates. I drop these every weekend. If you have any comments, insight, anything that you want to share it down below in the comments. I be creeping through there pretty often, so if you want to get in contact with me, that's a good place to do it. If you want to reach out to me directly, if you want to talk, possibly interview, any of that good stuff, where you can find me all over the place. You can find all of my stuff there. Any resource you need, any contact, that's the best place to do it. Link's gonna be down in the description as well. Thank you for kicking it with me for another episode of Crypto and the Caribbean. Till next time, we can link.